Hello, welcome to Business Today. Thanks for joining us. In this program, not scared off. Major analysts say despite the recent turmoil in global markets, positive macroeconomic conditions and the booming domestic consumer will continue to attract investors to Russia. And more loans. The mortgage market in Russia almost tripled last year, the main driving factor being real estate price growth. But first, an Economist Intelligence Unit report says that the recent turmoil on world markets hasn't scared foreign investors off Russia, with other analysts noting that sound macroeconomic fundamentals will mean Russia remains a favoured location for investment. Tatiana Polyakova reports.
According to EmergingPortfolio.com fund research, last year investors worldwide poured a record $22 billion into emerging markets. For the first 2 months of this year, they added $7 billion more. And there was a good reason. Last year, Mexico gained 49%, Venezuela over 150%, and Russia grew more than 70%. However, over past 2 weeks, Russian stocks fell around 20% in a global sell-off, which hit all emerging markets. Despite this, Deutsche Bank says that by many measures, Russia is still a more attractive investment location than most of its emerging counterparts.
I think at the moment fund managers are worried about risk. They're worried about markets which are at risk from the end of the carry trade, and therefore they're looking for markets which have got current account deficits or weak currencies as markets to avoid. Clearly Russia does not suffer from those risks. Russia would benefit from a flight to macroeconomic quality, and therefore away from carry trade markets such as Latin America, more than it would benefit from a flight from Asian markets.
Although the carry trade isn't a factor for Russia, the country does have other risks. The Economist Intelligence Unit report refers to danger from excessive state influence on business and lack of world-class managers. The report says positive macroeconomic conditions and the booming domestic consumer market is attracting investments and will help Russia weather global market instability. Tom Adshead from Alpha Capital agrees that the recent withdrawal of foreign capital wasn't that crucial for the Russian market.
This year, if you look at the Western flows into the Russian market, that they're not that big compared to the flows that we get from Russian portfolio investors. So, we've seen a lot of movement of people buying our funds. Our competitors are also doing well, and those funds are actually much bigger than what comes in from the outside world now.
He says despite the sell-off last spring and the repeat in the last month, the Russian market has survived. He adds that domestic investors will be the story of 2007. Tatiana Polyakova, Russia Today.
And according to Merrill Lynch, Russian banks represent the best choice for foreign investment, with the Russian banking sector becoming more efficient in comparison with other emerging economies. The bank said the boom in development was mainly driven by an increase in wages. However, Merrill Lynch says Russia still lacks a number of financial services, but has shown dramatic growth in retail lending. The bank is also forecasting that Russia will see more direct foreign investment into the banking sector. And Russian banks are becoming more active in offering loans, with the mortgage market increasing by $8 billion and almost tripling in size last year. Oksana Tregobenko has more.
The mortgage market in Russia grew by 181% last year. That's largely because property prices continue to rise sharply.
The consumer behavior has changed, and people realized that it's much better to get a mortgage than the prices are rising at such a high speed. Because if you're getting a mortgage with 9.5% and putting this money in your house, in your flat, and the flat will appreciate 100% per annum, so you are making a very good investment.
However, high property prices had a negative impact on the mortgage market as well.
A lot of people was pushed to cancel their demand for loans. Basically, around 30% of demand for loans was later cancelled because, at the time between people were applying for mortgage loan and they were able to find a flat, the prices were going up so quickly that they had to reapply.
Analysts expect the Russian mortgage market to maintain its strong growth rate.
This is the market which has the highest upside when you compare Russia to other countries. In Russia, mortgage represents just 1.3% of GDP. This is a very low figure.
In Ukraine, for instance, the mortgage is 4% of GDP, while in Kazakhstan it's 6%. And in the Netherlands, mortgages represent almost 100% of GDP. The Russian mortgage market is young and has strong potential. Analysts say future economic conditions will favor Russian banks and mortgage holders, and in turn helping to improve living conditions. Oksana Trugubenko, Russia Today.
And home lending in the United States was in the news overnight after the nation's second largest subprime lender, New Century Financial, had trading in its shares halted, and other subprime lenders saw their shares slump in Monday trade. New Century, which has seen its share price slashed by more than 85% this year, had trade in its shares halted by the NYSE after it disclosed that banks had either cut off credit or were signalling their intention to do so, increasing the likelihood of a bankruptcy filing or asset liquidation. Other key participants in the subprime market, which is the market for riskier housing loans, saw their share prices hammered, with Novastar and Fremont down more than 15% and Countrywide Financial warning that subprime lending could affect its results. Analysts say that with the US housing market in a slowdown and with subprime lending at a 7-year high, nervousness about the sector is affecting both the markets and sentiment about the US economy.
Well, the subprime worries are clearly having an impact on the market. People are worried about how far the weakness in the financial institutions will spread and what the impact will be on other sectors, especially home builders. It's having some impact on the economy because it's one of the contributing factors to the decline that we're seeing in housing starts and sales.
Which brings us to the markets, first of all to the United States, where the close saw the Dow and the Nasdaq in positive territory despite those home lending worries, with the sliding crude prices helping energy and inflation concerns. Discount retailer Dollar General was up 25% after agreeing to be bought by private equity group Kohlberg Travis Robert for more than $7 billion. Dow Chemical, Intel and Goldman Sachs were also higher. Tuesday trade in Asia sees the Hang Seng down in afternoon trade after the Nikkei closed lower, with Honda and Sony down in Tokyo, but broker Nikko Cordial up on speculation that Citigroup will increase its $10.8 billion takeover bid. And Tuesday Moscow trade has just opened after the indices closed mixed on Monday. Rowe UES and Norilsk Nickel both had good days, with investors reacting favourably to the OGK3 deal, which saw a record $1 billion worth of deals on the MySEX. And to look at the Russian markets a little more closely, we have Michael Teagarden from Metropole on the line. Hi Michael, thanks for joining us. The Asian markets are down this morning and there was some gloom in the US overnight with worries about home lenders. Are we in for a tough day ahead?
I'm not sure it'll be that tough of a day. I guess I would think it could be a bit sideways trading. I think people may still be looking to pick up some energy shares after this OGK3 sale yesterday at such a high level. Although I do think kind of the fragility of the global economy maybe highlights it today after China's inflation accelerated in February, and because of these mortgage problems in the U.S. that have threatened to slow down the economy. If China's rates go up, then some of the things that support Russia, like metals prices or crude oil prices, a slowing economy there could take some of the luster off of them. So today I would say sideways.
Okay. Despite the recent correction, the Economist Intelligence Unit and Merrill Lynch have had some positive things to say about aspects of the Russian market. Is this helping to buoy interest in local companies?
Yeah, I mean, the domestic economy in Russia is still very strong, and I think when you have companies like Merrill Lynch with it's an investment bank, they're advising clients, they have a huge global client base. Of course, if they're saying they do something, people are going to listen. I think their arguments on banks is very sound. I don't think it's necessarily that new. I think banking services in Russia, it's amazingly underpenetrated when it comes to that. So, yeah, there should be growth in the share prices of banks here. Now, whether that's going to be a short-term thing or a long-term thing, that remains to be seen.
Okay, and staying with banks, they're booming at the moment with lending up significantly over the last year. How's this affecting interest in local banking stocks?
Well, I mean, whenever you look at stocks, right, I mean, we know that there's been this growth. What we have to do is look forward. And I think I heard you guys talking about it in the background as I was waiting. I mean, if you look at the mortgage market in Russia, it's at a completely nascent stage. It's something like 0.6% of GDP. And in Central and Eastern Europe, where there are other emerging markets that could possibly be compared to Russia, you would have this at about 15% of GDP. And emerging markets in general, you would have it at about 12% of GDP. So there's still a lot of growth to go. And I mean, it's definitely good that we're seeing it happen in Russia. It's good that people are going out and getting loans. It's going to stimulate housing markets. It's going to, even just in general, any kind of borrowing can help stimulate retail markets as well. So it's a good thing.
Okay, Michael Teagarden from Metropole, thanks very much for your time. Boeing has agreed to supply 5 new long-range freighters to Russian transportation company Volga-Dnepr. And in a separate deal, Volga-Dnepr will also provide Boeing with ad hoc and urgent air logistics services. The agreements come after 10 years of cooperation between the two companies. Airbridge Cargo Airline, a subsidiary of Volga-Dnepr, plans to use the new 747s to transport cargo to Europe, Southeast Asia, as well as Japan and China. Volga-Dnepr also secured an option to buy 5 more planes, with the first aircraft to be delivered in February 2010.
Specifically, the deal is regarding these aircraft that we announced today, but it's part of a greater plan, of course, to create a global world-class airline in scheduled cargo business for Russia. The program that we've developed is based on new aircraft because of the distances that we fly are particularly suited for this type of airplane. There's no similar airplane that's produced in the world that can do what this aircraft can do.
And finally, global car giant Ford has announced it will sell its Aston Martin brand to private investors for over $848 million in a deal aimed at freeing funds for other Ford marques amidst a sharp fall in global sales. The iconic brand, whose exotic sports cars have appeared in James Bond movies, will now be run by a consortium of investors fronted by motor racing businessman David Richards, with Ford retaining a $77 million stake. Aston Martin became far more profitable under Ford, increasing production from 46 vehicles in 1992 to more than 7,000 last year. But 2006 also saw Ford post its biggest ever loss of more than $12 billion, and the sale comes amid speculation it may also seek to sell off more of its foreign marques, which include Jaguar, Land Rover and Volvo. That is the business for now, and I'll hand you back to Sophie for the headlines, followed by Natalia with sports. Stay with us.